Welcome to the Titans of Industry show. Today I welcome back one of the most vocal proponents of gold and silver, of the gold and silver industry, Bill Murphy of GATA.org. GATA stands for Gold Antitrust Action Committee. And we're going to be chatting about precious metals, of course, but also reflecting on the 2000 to 2011 era compared with the 2011 to 2018 phase. And Bill, thanks for coming on the show.
Thanks for thinking of me.
Well, man, what in October? It has been a very interesting month, no doubt. Lots of things happening with the general equities, with the stock market, and on the flip side with the U.S. dollar, gold, Bitcoin, etc., the safe havens, and the Treasury bonds and Treasury yields. Bill, the U.S. dollar has been the best performing asset of 2018. That hasn't happened in many years. Why do you think, or what do you think makes 2018 so different?
Well, I think part of it's because the other currencies have been so bad, and it's like the best of the worst at this point. And our stock market until recently has performed very well, and it's been a good safe haven, and we're raising interest rates, and you've got other countries, they're scared to death to do so. So you've got a dichotomy there, and it's playing out just like you said.
Understood. Now, let me ask you, the gold-silver manipulation that GATA.org follows so closely, is this still happening as a daily occurrence? Every day you can spot irregularities and abnormalities in the markets?
I think it's as bad as it's ever been, and probably worse. I've never seen anything like it's been this year with what they did starting with gold. They took it down from 1360 to the 1304 area and then just bombed it for no apparent reason and took it down to 1160, and now it's recovering. But on a day-to-day basis, it's just in lockdown. Just recently tried to get above 1235. They stuffed it. And silver, I've never seen anything like it in 40 years I've been watching and trading these markets. I mean, it's in complete lockdown, and you've taken the gold-silver ratio to above 84, 85 just yesterday, and it's outrageous what they're doing. The open interest is through the roof. It has been for years. It's led by J.P. Morgan and the rest of the gold cartel, and we're not sure what they're doing and why. We know what they're doing, but why? Are they so afraid of losing control of silver because what it would mean for gold? We don't know, but it's in complete lockdown, and there's no sign of any change. I think it will come and be dramatic, but we haven't seen it yet.
Now, let me ask you, this is very interesting. Now, what is the story about J.P. Morgan's huge physical silver hoard? Is it a rumor? Is it a fact? Where is it on the balance sheet? I know that a lot of people over at silverdoctors.com have been talking about this for years. Can you explain a little bit about this for people who do not know about this situation?
Well, it's interesting and it's complicated because they've got, I don't know, some 750 million ounces on their books, and we don't know if it's theirs or it's the government's or it's for a client. Could it be for China or somebody else? Nobody knows, but it's been the most negative thing you could ever see because you're right, been talking about it for years, and silver continues to perform worse and worse. Meanwhile, the open interest is at historically high levels. That means the longs and shorts on the COMEX. And I have a theory, and I could be all out of whack, but I think in 2008, Ted Butler talks about J.P. Morgan taking over the positions from Bear Stearns, but then silver went at the end of 2010 to 2011, went from 16 to 50, and the open interest was 30,000 contracts less. So I think they got out. I think J.P. Morgan bought physical silver all the way up, and even bought some at the top. But they made a fortune because they sold 2 or 3 or 4 times as much silver in the paper market, derivatives market. So they were way net short. They made a fortune all the way down, selling all rallies. We've been in a bear market in silver for 7.5 years, and I think they needed this silver to help them do what they were going to do in gold, which didn't top out since 2011, 6 months later. And ever since then, they've been working pretty much in sync on the downside, except silver's acted far worse.
Now, let me ask you, the community, the gold bugs community, the people that are very much huge fans of gold over any other asset class. Has this community shrunk in recent years, or has it gotten bigger? Going back to 2010, 2011, I remember it was insane as silver soared to 45, 47, 49. It was just everywhere online. What do you think about the strength of this community, the sound money community? Have the lessons of 2008 been forgotten through the years as time is going by?
Yes. The price action makes market commentary and creates public interest. At least in the West or the United States, business has been abysmal this past year for most people involved, and it's because of other assets have soared. We know what Bitcoin did in the stock market until recently, and real estate and art. And gold and silver have done nothing or gone down. Silver is not far from its 7.5-year low. So yes, and it's just human nature and what happens, and it's creating a terrific setup for some monster moves coming, which I certainly still believe are going to be there. But the interest in the West has waned considerably, yes.
Now, okay, so what's the best strategy then, in your view, going forward?
Well, it depends upon your risk parameters as an investor. You know, gold and silver are the safest, and keep them in a sound place. And the shares are probably the cheapest they've ever been in history, especially relative to gold and silver itself. There are just some fantastic opportunities, and some of the quality gold companies, silver companies, and the junior exploration stocks for people that want to take that risk. The opportunity is fantastic, but whether it's going to take off next week or next year, nobody knows. What I do believe, if I can contribute something, and let's see if I'm right, we're not going to have moves like we did in 2010 and 2011. When the gold cartel, which are these big banks and the U.S. government and so on, lose control or overpowered in the gold and silver markets, the prices are going to explode this time. We won't have a 12-year bull market like we did up to 2011. When gold and silver take off this time, watch out. It's going to be very, very exciting and explosive.
Okay, well that's very interesting. Now, let's talk about what's the catalyst for this. How do interest rates impact gold prices these days? Do you think there's a big correlation here, or are there other catalysts that are more important?
Well, it's a good point. I mean, zero interest rates were about as bearish as could be for gold, thanks to what the gold cartel did. Look at what the prices did of gold and silver when they took interest rates down to less than zero. So the biggest move of all in history, or one of them, till recently, it was in 1979 and 80 when interest rates went up to 20%. So it's the other factors, in my opinion, what the gold cartel is able to do, and other psychological figures, features of the market. Fear, for example, recently the interest in gold has picked up because of the turmoil in the stock market, and people are afraid of what their other assets are going to do. So I think something that comes out of the blue in the derivatives markets, or something that really shakes up the investing public, is going to send hordes of people into gold and silver, and it'll be very hard for the gold cartel to control.
Where can people check out more of your commentary?
Well, they can go to, first of all, you mentioned GATA, Gold Antitrust Action Committee at GATA.org. My colleague Chris Powell, who I'm to see in New Orleans later this week, does a great job. And I write a commentary on LaMetropoleCafe.com. People can sign up for a 2-week free trial if that's of interest.
Now, lastly, Bill, do you think there is any shortage in physical silver or physical gold if the demand for physical picks up, let's say, double from where it is right now, which is not very high? And secondly, with regards to the same question, are you aware of the immense buying happening with central banks becoming net long precious metals, and what do you think this is happening?
Oh yeah, well, we've got Hungary and other countries, buying gold in pretty good amounts, and it's because I think they see the handwriting on the wall, unlike the Western center banks, which are leasing it out and secretly to keep the price down. It's because it's going to be the place to be. It's so cheap. It's artificially cheap compared to other assets. So I think they know what's coming, and they want to be there. So what was the first part of the question again?
The first part of the question was whether or not you think there is real physical constraints, supply constraints, if silver demand or gold demand doubles from here.
Oh yeah, well I think that's what's going to happen, especially in silver, and that's why they're being so blatant and hideous about keeping the silver price so low. They're afraid of losing control, because if a lot of these, the uses of silver, these companies, you have to have it. It doesn't matter whether it's $14 or $80 an ounce. And if they're afraid, if all of a sudden people go to get their silver inventory in hand, they could create a scramble for it and a panic. And I think if silver gets above 21, that's what's likely to happen. That's the key number for me. Right now, they can't even get it through 15. But yes, I think especially in silver, you could see an absolute panic to make sure you've got physical supply.
Well, what I like about the precious metals industry is that the miners have reacted to the price action, and they've become leaner and meaner, and obviously even profitable at prices that we didn't think will be profitable before. So in other words, when there's a bull market next, some of these companies, even a move from 14.50 where we are right now as we're doing this interview to 20, which is a 33% increase for the spot price, for them as miners, the profit margins are going probably from $1 to $5. They're going 500% up. So I think there's huge upside once this bull market regains, and I think there's many things that are keeping it at bay at this point. And obviously I'd love to see it rally as much as the next guy. Hey Bill, thanks for taking the time and being with us. Very straightforward. And where can people find you at live events, if there is any that are happening 2018, 2019?
Well, I'll be in New Orleans, as I said, in the end of this week, and then we're lining up stuff for next year, and we'll make that available to people as they evolve.
Okay. Well, thank you very much, Bill.
Thank you. You take care.